And it's 1 p.m. in Lagos, Nigeria. That means it's time to do 55 minutes of business. Here we give you current and relevant information. So you stay with us, and this is what is coming to you in the next 55 minutes. Niger Republic defaults at domestic debt, and this is for the third time. We'll take a closer look at the proposal by the federal government in Nigeria to build a commodity board. And the ban on use of styrofoam in Lagos, Nigeria takes effect from yesterday. Let's see how far the government has gone. Good afternoon. Welcome to Business Incorporated. I'm Ini John McCall. We start off with what's going on in the global space. Oil prices were broadly steady on Tuesday, hovering close to 3-week highs on heightened Middle East tensions and recovering China demand. Brent futures ticked down 0.12% to $83.46 a barrel, while U.S. West Texas Intermediate crude for April delivery gained 0.34% to $79.46 a barrel. The March WTI contract rose 36 cents to $79.55 a barrel as traders prepare for that contract to expire later on today. There was no settlement for WTI on Monday. That's because of the public holiday in the United States. The Iran-aligned Houthis continue their attacks on shipping lines in the Red Sea and the Bab al-Mandab Strait, with at least 4 more vessels hit by drone and missile strikes since Friday. Tourism revenues in China surged 47.3% year-on-year and rose above pre-COVID levels during the National Lunar New Year holiday that ended on Saturday. Still in the global space, Chicago soybean futures gained more ground on Tuesday, with the market climbing to its highest level in almost 1 week on the back of short covering, although rising global supplies kept a lid on prices. Wheat dropped to its weakest level in 3 months on pressure from abundant Black Sea supplies, while corn rose for the first time in 4 sessions. The most active soybean contract on the Chicago Board of Trade, as the CBOT, was up 1% at $11.84 for a quarter of a bushel, and that's the highest since February 14th. Wheat slid 0.3% to $5.57 for a quarter of a bushel after dropping earlier in the session to $5.55 a bushel. That's the lowest since November 16. Corn added 0.5% to $4.18 for 3/4 of a bushel. Large speculators increased their net short position in CBOT corn futures in the week ended February the 13th. But still in the global space now, gold prices held steady on Tuesday despite a stronger dollar and elevated treasury yields as investors await minutes of the last U.S. Federal Reserve policy meeting for more clues on its interest rate cut timing. Spot gold was flat, $2,018.03 per ounce. Most of the U.S. markets were closed on Monday for that President's Day holiday. U.S. gold futures rose 0.3% to $2,029.10 per ounce. The dollar index was up 0.1%, and yields on benchmark 10-year Treasury notes were up nearly 4% levels, making greenback priced bullion less appealing to overseas buyers. Spot platinum fell 0.6% to $893.16 per ounce. Palladium was also down 0.8% to $946.41, while silver down also $22.93 per ounce. And we come back to Nigeria as the protest against the hike in the cost of living spreads to different parts of the country. Governments at all levels would have to begin the needed change by looking inwards to reduce expenses. These are the views of the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Ruwani, and he was on our show earlier today, Business Morning.
The economy is coming to equilibrium, but let us not deceive ourselves that there's a quick fix for this. Some things are now moving in the right direction, but very, very slowly. What the people want are, let us see the supply of the goods. Let's stop making fake, false promises. 2, let us begin to see that government expenditure and lavish lifestyle of government officials is toned down. Toned down. First of all, let us be honest with the people. Secondly, let us tone down our lavish lifestyles so that there's equal sacrifice amongst both policymakers, regulators, market players, and everybody. There's too much opulence and ostentation at a time of hunger and desperation.
And while Mr. Ruwani is asking government officials to tone down on their lifestyle, on the other hand, we've seen government also make some efforts to try to balance things out. For instance, the federal government has said that it plans to set up a commodity board to regulate the soaring prices of food in the country. And according to the Vice President, Mr. Kashim Shettima, who made this announcement at an event, that the board would be given the mandate to assess and regulate food prices, as well as maintain a strategic food reserve for stabilizing prices of crucial grains and other food items. Now, let's delve into this and find out what the Lagos Chamber of Commerce and Industry, what they see from this announcement and how they see it working. And joining us for that conversation is the president of LCCI, Mr. Gabriel Idahosa. Good afternoon, Mr. Idahosa. Thank you so much for your time this afternoon.
Good afternoon.
So what's the perspective of LCCI, concerning this commodity board?
Well, we had made a statement to say if it works well, if it is designed to achieve that purpose of being able to significantly provide a major buyer of products and channeling them through distribution to markets in a manner that ensures that the farmers get a good price and the consumers get a price that is not overloaded with the middlemen, that it will succeed. The primary purpose of the board is to do that. Give the farmers a good price for the products, ensure that there are fewer or no middlemen between the farmers and the ultimate consumers. So it is how efficient that the board can do that will justify the existence of the board.
But how do you see that being done? Because we do know that there are middlemen everywhere, and also some economists are not so comfortable with the idea of fixing prices or trying to, manage when the supply, because the natural thing is let the supply be abundant in the market, demand and supply will determine a fair price.
Well, I agree with you. The reason why we are having this situation is that the market is not functioning as it's supposed to function. In a normal market, the products will be there in abundance and the buyers will be able to get the products. But the middlemen in the system have made the market not to work the way it is designed or it should work in a free market. So we really do not have a free market now. When you have middlemen that buy all the products and lock them up in warehouses rather than sell them to the consumers. So that is what is justifying this intervention of a commodity board. In a perfect market, the buyers will get the products at the price that reflects the total volume of supply and the total volume of demand. But here, the supply is withheld by the middlemen, and then the buyers don't get the supply flowing from the farmers the way it should flow naturally. So that is why the commodity boards are being introduced. You might say that rather than have a government-owned commodity board, we should have private sector commodity exchanges to do the same thing. But we have not got to that stage where we have commodity exchanges that are able to perform that function in a manner that allows the supply and demand in a free market as you have described.
But Mr. Dahousa, this is not our first attempt at commodity board. What lesson can we learn from the time before now, to be able to adjust with the present one to make it work?
Well, the lesson is still transparency. Transparency, whether a commodity board is run by government or even commodity exchanges, it's transparency. If the middlemen we are trying to remove now are replaced by government officials who are controlling the commodity boards, then you get to the same situation. So the bottom line is transparency, a very transparent system where there are third parties that will participate in the process and ensure that the commodity boards will not become hijacked by a few people that have the same kind of connections that the current middlemen have. So that is all that basic issue of transparency in whatever we are doing, whether it's commodity boards, whether it's, of course, removal of foreign exchange, whether it's what we are seeing now with the foreign exchange markets. It's the whole issue of transparency that will make the commodities board work or not work.
So how do you see this, being run to make it work? You talked about transparency, but I mean, one way or the other, we're still dealing with Nigerians here. So how do you see us making this work, at least to solve the immediate challenge which the country is facing?
Well, the way we can make it work is to have the law, have the power of the government behind it, but ensure that the operators of the commodity boards are subject to public scrutiny. The way the Nigerian Stock Exchange is subject to public scrutiny every day, we know what's going in the stock exchange, we know who is buying, who is selling. If we have that level of transparency, so the daily transactions of the commodity board will be in the open space, the volume of products that they have will be in the open space, the prices they are selling is in the open space, the access to warehouses of the commodity board will be available to any person who wants to do business with the commodity board. If we can remove any opaque levels in the operations of the commodity boards, we will achieve the results. That means that government will only provide the law and perhaps the governance board, and that board must be predominantly made up of private sector interests, maybe the workers' unions, the professional bodies, civil society organizations, a wide range of supervisory board that will ensure that no set of stakeholders or vested interests control the operations of the commodity board.
All right, well, we do hope that this can work. Or better still, if we just have enough supply, then we may not even need all of this. I believe that's a more permanent solution, to all of the food supply.
I thought that would be the major conversation. Why do we not have enough supply as we used to have? The insecurity in the farmlands, that is the real solution. The insecurity in the farmlands has to be addressed. Once that is addressed, you don't need commodity boards. The middlemen will not be able to hijack all the products. But so long as we have the insecurity, the massive scale of insecurity in the farmlands, then you will have scarcity, and then you have to try all these measures like commodity boards or special rangers, people to protect the farm. And the solution to the problem has been there for the last 15 years, moving policing into various levels. So you have the federal police, you have the state police, you have the local police that can protect the rural areas, and then you don't need all these stopgap measures that we continue to do and avoid the real solution.
Well, obviously, that's the obvious permanent solution or long-term solution, and we do hope that the government can, look at the way of insecurity and handle it. Thank you so much, President, Lagos Chamber of Commerce and Industry, Mr. Gabriel Dahousa.
Thank you.
All right, now it's an ongoing conversation, obviously, back here in Nigeria. Unfortunately, it's our reality now, so we'll keep talking about it. Different views, but it looks like it ends up at the same point. Let's deal with the issue that's disrupting supply of food, and then we can get the problem solved. Now let's head to the market at intraday. In the morning, Mr. Bismarck Ruwani had said that the NGX is going to close even lower than it did yesterday. It looks like he is right, because as at intraday, if we look at the numbers, we see that it's in the red. It's 0.11% down. And even though we're still at 102,000, which is what it closed with on Monday, but we've lost 0.11% right there. GSE of South Africa is also in the red, even though is there a word like redder? Redder than the NGX is down 0.80%. And then we see other markets right there. The EGX, that's of Egypt, is in the green, and Kenya closed in the green too, 0.55%. And I mean, Kenya really needs a boost, because we know that at least that survival point has been 100, but it's gone lower than that, and has stayed there for a bit right now. We move over to the Middle East, where Abu Dhabi is. A lot of red also in the Middle East at intraday, at 0.23% in the red. 9,384.12, that's for Abu Dhabi intraday. Dubai also in the red, just at 4,260.95. It's lost 0.28% at intraday. Saudi is also in the red, 0.22% down at intraday. Qatar, well, managed to get up there. That's Qatar, 0.08% in the green. For the Middle East. There you have it right there. So everybody in the red except for Qatar. Now let's move to the United States and see what's happening there. They are back from the President's Day holiday yesterday, and the S&P futures inch lower early today as markets comes off that losing week in more than a week. Futures tied to the Dow Jones, we start with that, is in the red, 0.22% at 38,611.00. S&P is also in the red, 0.43%, 4,998 right there. And then NASDAQ also in the red, 0.65%. The move follows a losing week on Wall Street after economic data raised concerns that the Federal Reserve may not begin cutting interest rates as soon or as a lot of people thought, especially the market. Well, all three of the major indexes snapped 5-week winning streaks, and the technology-heavy NASDAQ that we saw had a drop, benchmark S&P and all of that. So a red market there. We're still grilling over the numbers that came out, the inflation numbers that came out hotter than expected. Let's move over to Asia now and see what's going on there. The market closed mixed today on Tuesday as investors assess decisions on key leading rates. China top on that. Nikkei is still around 38 but lost 0.28% at the close of trade on Tuesday. Kospi also down, heavy down there, 0.84%, getting really close to 1%. 2,657.79. Hang Seng Index escaped that for today, Tuesday, 0.57% in the green at 16,247.51. The CSI 300 closed 0.21% higher, 3,410, as the People's Bank of China cut its 5-year loan prime rate by 25 basis points to 3.95. Shanghai is in the green, 0.42%, 2,922.73, while in Australia, S&P 200 is also slightly down 0.08% in the red at the close of trade. Now let's head to the Europe, Berlin to be precise, see what's going on there. And one of the biggest news going on there, that EU foreign ministers have approved Red Sea naval mission and European warships and airborne early warning systems are being sent to the Red Sea in response to Houthis' attacks on international shipping. Let's get details from Ekrem joining us now from Deutsche Welle. Hi, Ekrem. Good afternoon. So what's the latest on this Red Sea issue? A lot of disruption coming.
Thanks for having me, Ini. European Union foreign ministers have given the final approval to a naval mission to protect international shipping in the Red Sea area. The EU-led mission, called Aspides, will involve sending 3 European warships and airborne early warning systems to the Red Sea, the Gulf of Aden, and surrounding waters. Since October 2023, numerous Houthi attacks have targeted vessels in the Red Sea and the Gulf of Aden region. Such attacks jeopardize the lives of civilians on merchant and commercial vessels and constitute a breach of the right of transit passage in straits that are used for international navigation. Now, EU High Representative for Foreign Affairs and Security Policy, Josep Borrell, said that Operation Aspides will play a key role in safeguarding commercial and security interests for the sake of the EU and the wider international community.
Yeah, but Ekrem, this is obviously going to cost the economy something. The war industry may gain from it, but the global economy and even the EU economy will pay for this.
The attacks have indeed disrupted global shipping and have forced shipping companies to opt for longer, costlier detours around Southern Africa. Last week, EU Economy Commissioner Paolo Gentiloni said that as shipping through the Red Sea has been rerouted, delivery times for shipments between Asia and the EU have increased by 10 to 15 days, and the costs of these shipments have gone up by around 400%. The German frigate Hessen, which has around 240 personnel on board, is also planned for the mission and set sail for the region over 10 days ago. Earlier this month, Italy's defense minister Guido Crosetto said if this situation continued, it could lead to marginalization of ports on the Mediterranean Sea.
So what about investors? Perhaps they'll be looking the way of the war industry at this time?
Well, with US markets closed Monday for a holiday, investors are eyeing major upcoming earning reports as well as policy meeting minutes from the US Federal Reserve. Attention will also turn to the European Central Bank as it might offer insights about long-awaited interest rate cuts. US markets have adjusted to the idea that rate cuts would come later and probably be less important than what was originally priced. As last Friday's data showed that the US wholesale prices were greater than expected, hopes for an early interest rate cut by the Fed were dashed.
All right, Ekrem, thank you so much for that update. Well, let's head to the commodities market now. We're looking at the price of cooking gas. Well, I think at the mention of this, a lot of Nigerians' heart goes palpitating, and it's been increasing consistently, like every other thing in the country. In the last 6 months, it surged by 75% to 16,800 for 12 kilograms. I wonder how we eat in this country while the price of natural gas in the international market has been on the decline. Inverse relationship there. Let's find out from Halima what's responsible for this. Hi, Halima. Good afternoon. So why do we have an inverse? I thought everything was going up in the world, not even just in Nigeria at this time. How come natural gas is declining?
Okay, so yes, it's increasing and it's still going to increase because cooking gas is a byproduct of natural gas and also crude oil. And if you look at it very well, we'll see that the demand for cooking gas has really increased because of the policy pronouncement of the government. The removal of fuel subsidy has really increased the price of PMS per litre. So consumers now look for a safe haven, which cooking gas is one of it. And so they tilted to the use of cooking gas to power their generating plants and also their vehicles. And so we see conversion to auto gas, and this increased not only the demand for cooking gas, but also the demand for cylinders. So this has really increased the price of cooking gas over the past few months. And then not only that, we'll see that the investment appetite has really dropped in the country because of various structural issues. And this has reduced the supply, the domestic supply of cooking gas too. And we all know the demand and supply mechanism, that when the supply is down, definitely the demand will be up and price will be up. And not only that, we'll see that the exchange rate has really depreciated in the past few months as well. And for us to really meet up with the domestic demand of cooking gas, there's need for us to increase supply through importation. And we cannot import without the forex, which is on a low of 1,800 in the parallel market as at yesterday. And so this will feed into the price of cooking gas as well, and it will cause an upsurge in the price of cooking gas. So these and so many other factors are really driving the price of LPG in Nigeria.
What about natural gas? And do we see it continuing this decline status that it has started?
Natural gas globally is used for electricity generation, is used for heating, and is also used for cooking. But presently, what we'll see now is that we have a mild winter compared to what it used to be. And so it's caused a decline in the demand for natural gas, especially in the US. And coupled with the fact that there is increased supply, increased production of natural gas. So we have two things coinciding. We have increased supply of natural gas and a slash in demand of natural gas. So this needs to drive down the price. And not only that, we see that China is the second largest economy in the world. And in the past last quarter, the economy has really declined, it has contracted. And so this has reduced the demand for not only cooking gas, but for all other things in the economy. And so this is also causing a drive down in the price of natural gas globally.
You talked about decline in investment. Is there something that Nigeria can do to drive investment towards this LPG?
Okay, so in Nigeria currently, we have different policies being rolled out by the government. And so it is causing confusion, especially for risk-averse investors. So they are trying to take a pause and see what the outcome would look like and what the investment environment would look like before they venture into it. And for the existing investors too, most of them are taking a pause as well, because vandalism, theft, and so many other things are also affecting their investment and the profitability of their aggregate investment. So government needs to do a kind of policy adjustment, number one, and the government needs to do a kind of pause and check and see how far the policies have gone, what needs to be adjusted, what needs to be removed, so that at least it will be a very good environment for investors to come into the economy.
All right, Halima, thank you so much for that. The government have their hands full, government officials, to look at so many things. But thank you for sharing your thoughts with us this afternoon.
You're welcome.
All right, we're still staying on the continent now. In South Africa, official unemployment rate has risen to 32.1%, marking a 0.2 percentage point increase from the previous quarter. The results of the quarterly labor force survey indicates that the number of employed persons decreased by 22,000 to 16.7 million in the fourth quarter of 2023 compared to the third quarter of 2023. Statistician General Risenga Malukeke released these findings in Pretoria, where the survey covering individuals aged 15 to 64 shed light on the country's labor market dynamics.
The unemployment rate has increased by 0.2 percentage points, and indeed going up to 32.1% as of the fourth quarter of 2023. And indeed, we are saying that both the absorption rate and the labor force participation rate have decreased. And of course, we are saying that the labor force participation rate is sitting at 60% and the absorption rate at 40.8%. The number of those that are unemployed increased by 46,000, moving us from 7.8 million to 7.9 million as of the fourth quarter of 2023. Whereas those that were employed decreased by 22,000, and of course returning us again to 16.7 million. The largest industries that recorded losses were in community and social services, 171,000, construction, 36,000, agriculture, 35,000. Whereas the largest increases, although they could not offset the losses generally, were in finance, 128,000, transport, 57,000, mining, 37,000.
Unemployment increasing both in South Africa and in Nigeria, as we saw Nigerian numbers yesterday. Now we move to Niger Republic, where that country has missed 3 more payments on its domestic debt. The sanctions imposed on the West African nation after a coup last year weigh on the state of finances. The Nigerian authorities missed a 13.4 billion francs, that's about $22 million, principal payment on a 1-year bond that matured on February the 16th. Omwa Tites, the regional market for government securities, shared this in a statement. They also failed to make interest payment of 1.07 billion francs and 284 million francs on 2 7-year notes, which is due 2027 and 2030 respectively. Omwa Tites notes that this occurred in the context of Niger being subject to sanctions imposed by Economic Community of West African States and the West African Economic and Monetary Union, also known by its French acronym as UEMOA. Yeah, well, we know that Niger recently left ECOWAS, and so those sanctions are still there, and a lot of conversations still around that. Now we come to Lagos State, where on January the 21st, 2024, the Lagos State government, through the Ministry of Environment and Water Resources, announced a ban on the usage and distribution of styrofoam and other single-use plastics in the state. It was supposed to start immediately, but I guess listening to the cries of a lot of stakeholders in that value chain, it has moved, and regulation or implementation started on Monday yesterday. Now let's find out from the director of Permanent Secretary, I beg your pardon, Permanent Secretary, Office of Drainage Services and Water Resources of the Ministry of Environment in Lagos, Engineer Mahamood Olakunle Adegbite, joining us now to tell us how it's been since yesterday. Engineer, good afternoon and thank you for joining us on the program. How has it been? Implementation on the ban started yesterday. How was the experience? How are you implementing it?
Okay, thank you very much. As you know, the issue of styrofoam is not, of course, the noise is just that the fact that Lagos State has banned it in a risk, but it has actually been banned since 2020, except the fact that we gave a moratorium of about 2 years for it to, at least for the manufacturers and the sellers to get their act together and make sure that they get it off market. So the implementation yesterday shouldn't be a surprise, but of course, you know how we are. It is still a surprise, but it's something that we are very sure that within the next 2 weeks, it will be, once it is sustained, it will have it closely, we'll have everything off our markets.
So tell us, how is it working? Like, you go to factories where they are being produced, you shut them down. How are you implementing it?
Okay, the thing is, we know the factories. In fact, this afternoon, we are, just as a continuation, we are having meetings with the manufacturers again, not the first time. We're having meetings with them. But for now, what we are doing is at the markets, we'll get them off the market. Also, the factories we are telling them that latest by Friday, there shouldn't be any production at all.
Okay, but what about those that have already gone beyond the production? For instance, you have some food sellers, barbecue sellers, they use all of that. Are you also dealing with them, or you hope that dealing with the producers and distributors will thin out the supply to them?
It is across the value chain. Again, I like the picture you are showing now. Look at what we have in our canals. And it is not only, it's not peculiar to this. Even the lagoon is also filled with styrofoams. Part of our lagoons are becoming dead zone because the fishes are also taking this plastic stuff. So it's something that must be done across the value chain. So both the sellers, the manufacturers, and everyone involved are targeted. So we are sure that by next week, we shouldn't have any in our market. But as I tell you, we will sustain the enforcement and make sure that this environmental nuisance is off Lagos.
Any fines? Do you have penalties for,
For now, there will be no fine. All we just want to do is to make sure that we take everything off the market. And then subsequently, maybe as we go along, we will now bring out the fines. But it is not an issue of revenue generation. It is something that we know that we have to take off our markets, off our streets.
And well, thank God you're the permanent secretary in the Office of Drainage, because we already have those that have been out, and I mean those pictures, the videos that you saw, they are for real in a lot of areas in Lagos. What's the state government doing? The rains have started. What's the plan?
Okay. Just as you mentioned, the fact that the rains are here and the fact that we are tackling the number one nuisance in our channels, which is what we are seeing on our screen now. But basically, what we are doing is to ensure that we maintain all the channels. Again, this is not the silting, this is the rubbishing, or what you call it, garbage. It's more of cutting away refuse. These are household items that should be in the solid waste bin, not inside the channels, but this is where we find ourselves, and we must make sure that we sustain maintenance aspect of the channels and also complete all ongoing projects. For this rainy season, today is a litmus test for us, and we are sure that we are compacting it within a reasonable time. What you have all over the state is just specks of flash flood, which I'm sure that by now we shouldn't have anywhere flooded in the state again. We have issues where we have pockets of flash flood, but we are containing them.
But we know that apart from, if you look at our drainages, it's not just styrofoam you have there. I mean, you have the plastics, you have the sachets and all of that. While I don't think the people would welcome, a ban on everything, but we've been talking about enlightenment of people not dropping waste on the floor in the drainages for a bit, but sometimes it seems like the people forget, or I don't know, perhaps we don't have enough waste bins in public places enough for people to turn to when they have waste to dispose.
You see, it's just a question of course, I am very sure that there is hardly any day that you would not see or hear anything from the state government, whether in terms of appropriate solid waste management or not throwing garbage inside our drains. But our people are just a bit recalcitrant, and we will just ensure that we engage more. We will ensure that we put out enough advert out there to make sure that people hear. But basically, and that is why you will see that we are also touching all the open spaces. Basically, where we have issues are those people that you cannot document, or undocumented people that are staying under the bridges, so those do not have where to throw their garbage except inside the drains. We are making sure that we address those issues one by one. If you notice, we have cleared out Ijora Olopa under bridge, we have cleared out our Balinde. So it's something that we will ensure that we intensify, making sure that all our open spaces are not occupied by unidentified people.
All right, thank you so much, Permanent Secretary, Office of Drainage Services and Water Resources, Ministry of Environment in Lagos State, Engineer Mahmoud Olakunle-Adegbite. Thank you for your time, and we wish you the best as you go about the enforcement.
Thank you very much. Thank you. It's a pleasure.
All right, let's take a break now. When we come back from that break, it's good to have Ladi back in the studio. I don't know how long we'll have him for, but let's make the most of today, but that's after the break. Welcome back to Watching Business Incorporated right here on Channels Television. We head to the crypto space with a very red board and Ladi. Maybe we shouldn't have had Ladi.
Yeah, maybe
we
Ladi.
We haven't been around and we haven't had this much red. You know, so I don't know.
And the bears show up.
Go away with your red.
The bears show up too. But it's not so bad. It's just, still around. Still around 52,000 if you look at 995.
Almost 51.
Almost 52,000 at this point.
The glass is half full or half empty.
Half full.
But I learned we may hit 69 before the halving impact comes.
Yeah, there's so many prices, being thrown around at this time.
This is before the halving.
Before the halving.
Yeah.
But at the end of the day, if you've been in this market long enough, you know that the halving always has an impact, on price. So, but things change sometimes. So you need to manage one
of the analysts we spoke to also said that perhaps investors or the market is already fixing in the impact of the halving. So the halving might just come and we don't see such a move or big move.
And this market,
priced in.
Sometimes you sell the news, when it actually comes, and there you see a drawback.
By the rumors.
On that asset class. But it's interesting times for Bitcoin.
Very interesting.
We'll see if this bullish sentiment continues. But it's a pullback. We're seeing some profit taking there with red on the board at this time. You see Ethereum trying to get above that $3,000 mark per coin, 0.26% down. But we're seeing this from 12 noon today. These are numbers we have. Let's look at the top stories today in the market. And you see it's still a greedy market, 72 points over 100, showing that investors are still quite greedy in this market. Up to some of the headlines now, we see BlackRock, big asset manager, one of the biggest in the world at this point. They've launched the iShares Bitcoin Trust ad. At this point, it's the world's largest asset manager, and they are looking quite bullish, on Bitcoin at this time with a campaign targeting, mainstreaming investors. And we're seeing analysts actually reacting to that. If you put up that tweet, I see the campaign there that BlackRock is putting up for Bitcoin. They did, tweet the picture saying Bitcoin, has landed. So if you can put up that tweet, you see it there. Bitcoin Trust ad by BlackRock. Then moving on now, we see the UK set to release crypto legislation. That's coming in about 6 months. This is basically about stablecoin legislation. We see the economic secretary in the UK there announcing the intent to pass the new laws before the upcoming general election. So expectations remain vague on specific details, about regulation for stablecoins, but definitely markets will be looking out for that. Then talking about stablecoins, Africa, there's some observation there showing that Africa prefers USD stablecoins to Bitcoin itself. You've seen prominent, figures in the crypto space. They've shown that they've seen a notable pattern within African crypto market, showing a growing preference, among Africans for US dollar-backed stablecoins over Bitcoin. I'm sure it's the volatility with Bitcoin that keeps them away at this point and gives them more preference for the stable coins. Who doesn't like a stable asset, at this point? Let's bring in Rume Ofinau, financial market analyst. Hello, Rume. Great to have you.
Ladi, good afternoon.
Yeah, so, a lot's going on at this point. The biggest asset manager, BlackRock there, it seems that they're going hard now to attract customers to their ETF. How are you seeing this?
It's a very welcome development, Laddie, making sure that crypto appears as one of the asset class, having very strong legitimacy. For now, we'll discuss it here about Bitcoin either being for criminals or riskier asset here and there. But the fact that the biggest and the best is coming in to make ads to people, not necessarily physical Bitcoin, but helping them to get Bitcoin through the Bitcoin Spot ETF, it makes a whole lot of sense. You're targeting the baby boomers, those in their 60s, and only makes sense because these people don't see realities around the digital assets. This is a new world we're living, and a whole lot of things actually is changing right about now. But on the flip side, where I have a very huge challenge with all of these ETF things is all of them, a lot of them are from the US, and it only makes the influence, more influence from the US economy. So there is a drawdown in the US economy, which is actually signaling now from the CPI and PPI figures that came out hot. It only means that there might be some slow liquidity in the crypto ecosystem. Because right about now, with all of this that are happening, centralized exchange platforms like Coinbase, Kraken, and the likes from the US have recorded some really huge market volumes coming in where the market depth was around 14%, but now has grown to about 48%. So let's not allow the US drive the market when the time comes. Let's also have some way to balance it. And one other thing that I like to talk about is retail investors are not in this market for now because it's not showing even in the Google trend, all right? Because all of these big investors actually like to put around 1% of their investment portfolio in the ETFs.
Right, and definitely you did mention US taking the lead when it comes to the Bitcoin ETFs. But do you see any other continent following? Let's take Africa, for instance. Are you seeing any ETF coming from any capital market in Africa?
I don't see it for now, but in the future, I'm really, really optimistic. But the couple of young people that we're having that are really, really, really involved in technology, quoting the Minister for Communication and Digital Economy some days ago was saying Nigerians are going to be exporting tech experts even more than India. It shows that in the crypto space, we're going to be doing more. And all of these young people are also going to be the one in the financial sector to say, okay, we're going to need ETF. But in the short to medium term, I really don't see this happening really quick because we don't have a couple of things in place. We don't have the laws regulating and giving proper clarity, even though the CBN has come to say, oh, these are guidelines before banning the ban that has been for a while now. SEC hasn't come up with anything. National Assembly members don't even go talking about anything in regards to digital assets, where their counterparts are talking about how to regulate stablecoin, AI, and a couple of other things. It shows that if we don't get it right, the idea of spot Bitcoin ETF coming in is going to really hurt our financial system.
Yeah, but I guess Nigeria, did well being the first to, launch the central bank digital currency. That's the e-Naira. So I think we took the first step, when it comes to that one. Let's look at some other, observations we've seen in the market now. We're seeing that Africa prefers stable coins to Bitcoin. At this point, when it comes to the P2P market, definitely the alluring image of stability. I guess that's what's attracting consumers to that.
Exactly. I think it's not just about Africa now. So third world countries, most especially, prefer the usage of stable coins like USDT, USDC, and likes. It also has its downside using stable coins. Sometimes we had what happened towards 2022, where a stable coin an algorithmic stable coin actually pegged. It can happen to any of these stable coins. For example, USD Theta has been having one or two issues that right here. And if it doesn't go well and it has some challenges, it's going to also affect it. So the question is, how stable is stablecoin? But they have been doing well for a while now. They have been helping people save their liquidity in order to be able to buy cryptocurrencies like Bitcoin, which is the flagship, effectively. So it stems to the currency of these countries not being stable because of probably bad economic policy and some other things that are happening. That is why most times I like to encourage people to build an ecosystem that benefits their country. We cannot be, even though we have challenges, we cannot be pricing some very basic things in dollars. It helps to weaken our currency. But away from that, it's still going to happen. It also, again, calls for the authorities to regulate the use of stable coins because that's a different economy entirely. To allow it to be free for all, not having a cap to stable coin usage in the continent, not just Nigeria now, it's going to render some of these other indigenous currency useless, considering the fact that out of Africa, none of these currencies are used for international settlement, which is one of my pain, and I like to say, all right, there. So we need to start working to see how we can strengthen our currency, even though challenges is right there and here already. So we just need to work around that to see how we can help to build our own ecosystem using our own stable coin, probably building something around that can save our currency.
Yeah, because at the end of the day, we this is our national treasure. At this point, we need to do all we can, to strengthen the naira. I did get a peek at the P2P market rates, and it's looking quite weak, at this point. Talk to me about other ways that this P2P market can actually be some kind of support, to the naira, because at the end of the day, it's still looking like it kind of like contributes to the weakness.
I wouldn't say it contributes heavily to the weakness because you actually just very minute amount of young people don't have the data right now that are involved in all of these transactions. People that are actually heavy in volume with the US dollar bill, also you most likely prefer using BDCs, doing volumes here and there. So just a small percentage of young people and some older ones alike are the ones using. So I wouldn't want to say that it's enough to put pressure. But going forward, there needs to be more collaborations with P2P transactions that has come to stay and is going to be part of the global economy. There needs to be some kind of engagement with those involved in the industry and government agencies to come to have a roundtable. All of these are going to form more or less like a template, a framework where we are going to agree on how to move forward. Because the truth is, even though some individuals are happy in some sort that, the naira to the dollar is high and they are holding more of the dollar, it also hurts because if you go to the grocery shop, you're still going to buy things more expensive, even though you're paying more of the naira. You're going to buy things more expensive. You still have relatives that are still going to complain of terrible economic situations in our country. So no one is isolated from all of these things. So I'm being positive here. There need to be roundtable discussions with a couple of us that are here and those in the helm of affairs to see how we can find a way to have a structure where some of these things can work side by side in order for us to all win. Because the idea is we all need to win. If we don't win as individuals and as government, it's also going to be a challenge for us. We have just one economy, which is the Nigerian economy. I don't know of any other economy. And this is our priority, and we have to build it.
Yeah, I guess we all have to, at some point, come together at this time because we need to keep the naira strong. I see the rates right there in the P2P market is not looking good at all. But thank you so much.
I can't even talk about it because it's very hurtful.
Doesn't look good. Hashtag strengthen the naira. Thank you so much, Romeo. It was great having you.
Thank you, Ladi. Always a pleasure.
Yeah, so there you have it, you know, at this point, we all need to appeal to our sense of, you know, nationalism at this point, because, you know, it's our pride here. The Naira is our pride. We cannot
hashtag
afford
strengthen the Naira.
Hashtag strengthen the Naira at this point.
I think if we intentionally work with that at all levels, not just the government, but also individuals, I guess we could achieve something. So maybe, Ladi, you should drive that hashtag strengthen the Naira.
Because I do not want to see a 2,000 Naira. I don't want to see that.
We're so close to that. It's so scary.
It's too close,
All right, thank you so much, Ladi. Good to have you back.
Thank you.
That's it on the program. Thank you so much for being a part of Business Incorporated today. We have another one coming up tomorrow. But first, we'll start with Business Morning, obviously, at 10 a.m. So do join me then, 10 a.m. And then we'll do 1 p.m. again. We'll take you around the world of business. That's what we're here for. Watch the program at any time, www.youtube.com/channels web. And you can watch Business Morning, Business Incorporated. I'm Ini John Mekwa.